Welcome back. This is the last part of my interview with the CFO of ZEPP Health in Beijing, shot earlier this year. I published a full video, one after another, here on the channel publicly, but as you know, you can also always find a full version in my Patreon. On my Patreon is also where I will make another video about, unfortunately, something negative that I found out about ZEPP Health. So that has to do with one of the companies that I have invested in, and yeah, I'm going to share some due diligence that I've done, and I've talked to somebody who is directly affected with this. And then of course we also have ZEPP Health earnings coming up, and this will be interesting whether or not this already shows or guides us towards a turnaround, hopefully, for the business. In this interview part that I'm now showing, we also talk directly about the stock price and you know, the composition of the shareholders and you know, the outlook for the stock and so on. And I really appreciated that the CFO talked with me that openly when I was in Beijing and meeting him at the headquarters back in April. And so in addition to this interview, there will be more content about ZEPP Health. For example, these strange intraday moves that we've seen recently. I don't know what's going on there. It's going up 20% in a day and then dropping at the same time, like just before market closes. It's super weird to see this. Anyways, the most important part, of course, is that ZEPP Health can recover fundamentally, and that's something where the CFO has guided us to towards the end of the year, Q3, Q4. So hopefully some positives for ZEPP shareholders soon enough, and then of course I'll keep it covered here on the channel. But now enjoy the last part of our interview, and if you haven't yet, now is the time to subscribe to the channel and also give this video a like so more people can actually see it. And now enjoy this content.
And as I said, I think the share price movement, if you ask me, obviously I'm biased, is very much hampered by a few things, by the most recent China delisting risk, which has been removed by the end of last year, by the geopolitical risk between China and US, and I think that is actually moving towards a better situation right now, and by the consumer discretionary income, and also the COVID thing. And I think COVID is behind us. Consumer discretionary income is still a question mark, but at least we see positive signs coming out of China towards the second half of this year. So I think all those, it's like a perfect storm, right? The perfect storm hit us, and we are also in this journey of transformation. And I'm glad that we didn't waste this crisis, right? So at least in the past 4 quarters, we were able to take all those KPIs under our control, and we were able to bring it on a positive trend upward, right? So I think, yes, to a large extent, I think our share price current performance is very much driven by the macro economy, and the good thing is we don't really use our share price as a currency. That's the reason we didn't do any M&As. We don't have, if we have M&As, those are bolt-on M&As in the magnitude of a few $1 million on a technology, on a specific algorithm, etc., etc. A lot of things are developed in-house with R&D team here, and also in our overseas R&D team. So what we're trying, and as I said, we have more than $150 million of dollars cash on the balance sheet to support us on the journey of transformation, and in the meantime improving our R&D quality, improving our product, the attractiveness of that to the consumers. And I have always told my investors and my employees that if it is gold, it's going to shine, right? Sooner or later, right? So, and I still believe in that, right? So that's why we're trying to fix the fundamentals, and I think the moment we get that fixed and we get the transformation journey over, we should be able to go back into the shape very soon.
regarding the share price, I think you have done actually also 2 activities during the last couple of months. Just to recall them, one was I think you offered a dividend, right?
Yeah.
I'm not sure about the status of that, but so investors received a dividend, which is quite unusual for a small company, I would say. And the second one is there is a share buyback program, right? I'm not aware what's the current status. Maybe you can briefly just talk about those 2 and a little bit like what was the management thought behind it, and give an outlook on what you can say about what are your current plans.
Okay. Now, so dividend was that was 2 years ago, I believe, right? Okay. So then we had a profit, and then we saw the share price was a little bit disappointing, and then it was a try from the management because if you are you know, I mean, for those of you who understand the capital market a little bit, I mean, there's a term called dividend stock, right? And there's a term called growth stock. At least that's in the past, but I think these 2 are converging, right? In the past, growth company, if you have high growth, you can have losses, billions of losses, and your market cap will go through the roof. And then I think those companies, in the meantime, has all debt. Yeah, so I think investors' emphasis is shifting back towards profitability, and if you have a continuous performance on a steady profitability with a good dividend, then you can be so-called a dividend stock, right? So that was back 2 years ago. We think we have a good profitability. We think that the share price was not reflecting on the fundamentals. So that's why that was the rationale on giving a one-time dividend for that.
That was a one-time one?
No, that was 2 years ago.
Okay.
No. And then we actually continued the share buyback, and we're still doing it on an ad hoc basis. Okay. Actually, the board gave us a mandate of up to $20 million. We have kind of bought back half of that, 10 million. We still have 10 million to go, right? And then we still believe on the long-term value of the company. That's why we will continue buying it back. At the right price. I think this at this moment is a good price to do. Yeah.
What do you say about the valuation? Like in terms of if you look at it, do you think it reflects the current market in general, or would you say you personally? Yeah, I mean, like let's put it like this. I think it's been a very rough time for most participants in the market, but I think what was interesting is that the way you described it before, that ZEPP Health should actually belong into this other basket of companies that sort of have a healthy cash position and sort of a healthy business. Of course, you can say it turned a bit negative, but you could also argue that ZEPP Health is not per se only a growth company, whereas it had 30% growth before, but it's rather a traditional company in my point of view. So how would you say, what would be a good way to look at ZEPP Health as a company in terms of a valuation mindset? Would you say it deserves a high multiple or a traditional one, or so where do you see it?
No, for sure I think it deserves a higher multiple. I didn't see this company just as a traditional sell-the-box type of company. That's also not the company I would join, right? I think it's a technology company to start with.
Did you also own stock when you joined the company? Like, what's your personal incentive, if I can ask?
For sure, there's an equity portion of that, right?
Okay.
So, and I'm down equally to the other investors, retail investors or institutional investors, right? But I still believe that if we get the fundamentals right, right, then the valuation and everything, it's just a matter of time for the market to see it. It's as I said, the gold is going to shine no matter where you put it. Yeah? Maybe there's going to be times whereby there's dust on the gold and people think it's a stone, right? But once you undust all the things, I mean, the gold is going to shine. Yeah?
So who are your shareholders, and are you talking to them? I mean, today you take the time to talk to some of us, like the retail investors. But can you tell us, like, just to give the idea, like, who's owning the company, and do you get any feedback from them?
No, we have a good mix of institutional investors as well as retail investors, right? So, for example, the management, like all the other China tech companies, owns 30% of the company, ballpark, right? And on
so
top
it's
of
a founder-owned business.
On top of that, we have Xiaomi, which owns around 20%, right? And on top of that, we have reputable global funds. For example, the Wells Fargo, now they're called Allsprings fund, and the Fidelity and Franklin Templeton, Morgan Stanley, etc., etc. All these guys, which I just listed or mentioned, actually own around 75% or 80% of the company's shares. And we talk to them on a regular basis, and I think they are supporting the company on this transformation journey. Right? So I think that also gives us the confidence that we're doing the right thing.
Cool. All right, maybe my final question, because I already took almost an hour of your time, and I'm very grateful for that. But let's say it like this: some people might be really fed up now with the performance of the company, and they don't want to hear any excuses. Let's say you're really like annoyed by everything. So be critical. What do you think some mistakes the company has made in the last couple of days, and what are you looking to fix in a positive way speaking, right? So because we sometimes, and I think people can understand, there are macro factors at play, but you cannot always blame everything on somebody else, right?
No, so I think no, I mean, but maybe the first thing which comes to my mind is that, similar to a lot of China tech companies in the past, I think once the economy was growing very fast, right, everything was expanding, right? There's a famous term in China which says that if you get the right industry, if you get the correct industry, even a pig can fly. Right, so I think that's what I noticed. Right, so there's less scrutiny compared with established multinationals company on the cost controls, on return on investment, on yes, speed is a positive sign in these type of companies, but scrutiny on whether or not there's return on investment, whether or not investing in a retail channel is going to bring you money, or it just you're buying 100 euro with 100 euro of turnover, right? So that type of decision was, and that type of control was kind of missing. Right? So that's what we're trying to put in place in the past 2 years since I joined the company, to really establish this mindset that everything has to be disciplined. Right? When we spend a single penny of money, we need to think about whether or not there's return on investment and how fast you can generate a return on that. Right?
That's something I'd like to ask you as well. How good is ZEPP Health at spending money, like in terms of the investments, but in general, like the return on capital? What do you think?
I think 2 years ago, for sure, not very good. Yeah.
Okay.
But confidently saying, I think we're much better versus 2 years ago.
Okay. Yeah. Well, that's good to know. All right. Yeah. Anything else you wanted to add, or anything that I forgot to ask and that you would like to add in the final minutes?
No, but thank you very much, Marcel, for coming here. It has been a long journey for you, and I hope we can continue this talk on a regular basis. And yeah, very appreciated.
Cool. Thanks. Yeah, it's been a difficult journey for all, of course, but I'm glad to be here. Seeing it with my own eyes is always better than just reading on it on the internet. I'm glad China is open again, so this is a very good situation for all of us, I think, for some of the macro factors that we talked about. And it's certainly helping myself, and I'm trying to get this message across to you guys as well. So that's why I'm here. That's why I brought the camera. And then thanks, Leon, and the investor relation teams, that you are open to record such a session, which I think is not usual. So yeah, thanks again for your time, and I hope you all enjoyed this.